All right, everybody. Thank you for joining us on this training. This is going to be an in-home mortgage protection training. And just want to kind of go over real quick what I go into the home with. If you're wondering who I am, my name is Mike Shroades. I like to show up with my license around my neck because that looks official. A lot of people set their appointments by saying, I'll be the person and I'll have my license on my lanyard. So I like to come in and show that. That lets them see some sort of authentication. When I come into the home, we're not going to do it right now, obviously, because we're recording live in the studio. But I'll knock on the door, and I want to share this real quick. The other day, and I've been in this business 3.5 years, and the other day, Mike Killamette talked about the importance of how to knock on a door, and I'd never really thought about it. I just go up and bang on the door. Well, the other day, he said, you know, some people knock and they sound like a cop. He said, and I knock like this, like it's not a cop knock. So the other day, I'm in kind of a different kind of neighborhood. I'm in a shady neighborhood. And I go and I knock, and the lady throws the door open, and she says, you knock just like a cop. So, so the important thing is be very conscious about this, how you park. I park where people can see my vehicle. I want them to know that I have pulled up. I haven't walked down the road. They can see the car I'm in. When I approach their home, I'm smiling. Some people even just go ahead and do a wave to make sure if somebody's looking. So what I do is I knock and I greet myself. I say, hello, my name's Mike Shroades. We spoke on the phone the other day regarding mortgage protection, and I'm here for the appointment. And they're usually like, oh, okay. So they'll invite me in. The first thing I do when I step into the home is, or on the front porch, there may be a rug. I always wipe my feet, and I ask, no matter who, what, where, or why I'm there, the first question I have is, ma'am, sir, would you like me to take my shoes off? Now, here's the thing. You got to be observant at that point. If they look down and they got new carpet and their shoes are off, and they say, oh, you don't have to, because people don't want to inconvenience you. You know what I say? I say, you both have yours off, and I'm going to respect the rules of this home, and I slide my shoes off. That goes a long way in people. It shows that you're number one, it shows you're concerned, and also that you're being courteous about being in their home. So then what I do is I always say, you know, because sometimes you'll walk in, they'll say, okay, here's the couch, and they'll start moving the TV guide and the newspapers and moving the iPads and everything. And so what I do is I say, hey, I have a little computer with me, so I need to set up on a table. So that's what we've done here. Amber and Neil have graciously joined me today. And I always do it so that I'm facing them. And the reason I do that is because husband and wives, and Neil, you probably know this better than all of us, that have been married a long time, they have a way to look at each other when they're trying to call someone out or when they're thinking BS or whatever. They have a way of looking. And I have very good peripheral vision, Amber. And I have literally been like this, looking and had someone out in my peripheral and seen her going. Just like that. So it's very important that you're able to see them so that you can see their body language. So that, you know, if we come in and the first thing Neil, cross your arms, Neil. First thing Neil does is that, don't just dive in. Take a little time to earn his trust. Take some time to talk to him. Hey, Neil, is that your old 57 Chevy out there?
It is.
You like that?
I do.
Man, I'll tell you, that's really a cool ride. My dad never had one. My dad used to have one, you know. And look what happens. Yeah. There, those arms come down. So just little things like that. Let's say you come in and Amber is everywhere but at the table. Mm-hmm. Have you ever had that happen where you go in and one of the spouses just get up and start walking around, start cooking, and it tells me they're not engaged? If they're both not sitting at the table, here's what I would tell you to do. Just say, hey, it looks like y'all are a little busy. I'm going to reschedule this for next Sunday at 2 o'clock because this is really important and I need both of you to sit down.
That's good.
Okay?
Excellent.
So that way you're not saying, well, he does all the decision making. Anytime I've ever had one spouse say he or she does all the decision making, they always say, well, I got to talk to the other person. Which brings me to this. If you ever get there and let's say you knock on the door, Amber answers, and you notice there's only one car and there's supposed to be two people here, I always say, hey, is Neil around? No, but I can handle it. Hey, that's okay. I do need to meet with both of you. I'll be back this same time next Tuesday at 2 o'clock. just little stuff like that. But today we're actually going to do the in-home. So let's say I've already said, hey, let's sit down. Let's sit down here at your table. I need somewhere that I can prop up my computer. Now, because of the camera, I'm not going to prop mine, but you can then put your iPad up and begin the business. Just so you know, when I come into the home, a lot of people do it differently. So I'm just going to show you what I do. I always come in with 3 things in particular. There's actually a 4th one that I will tell you about. The 3 things I bring is the lead. I bring the lead in every home. I bring the client worksheet. And in every home, I always have my mortgage protection Americo sheet, so I can go over this because we sell mostly Americo, and it's really nice to use this in a transition period that I'll show you here in a few minutes. Also, Faith Gerardo, however we say her name. Faith, how do we say her name properly?
I don't know.
Gerardo. Faith has developed a grid for all products. Have y'all seen that?
It's awesome.
It is great. Final expense, mortgage protection. You can take the grid into the home with you. So when you get to the product, you can look at it, and if their health is good, you can look at it. You'll know what company to place them with, and we're getting ready to do a lot of training on that, and that's forthcoming. But right now, we're just going to kind of do a basic mortgage protection, and we'll go ahead and get started, okay? So this is how I do it. All right. Hey, Neil, Amber, appreciate you letting me into your home.
You bet.
Neil, I saw the fishing rods out there. Where you fish at?
Down in Sullivan Lake.
Oh, okay. You do any fly fishing?
Bass fishing.
Oh, bass.
Fishing, yeah.
Okay.
Yeah.
Okay.
Are you a fisherman?
I do. I like to fish up in the Smoky Mountains. I do a lot of trout fishing, fly fishing,
That's awesome.
spin casting. Yeah. And I live, of course, you saw by my phone number. I live down near Panama City Beach, so every now and then I get to do a little salt water
Very
fishing.
nice.
Yeah.
Very nice.
Yeah,
That's awesome.
You get to go with him, Amber?
No, I'm not.
You don't like to fish? Do you cook it?
No.
You don't?
No.
Oh, come on now. Well, hey, your time is valuable, so I want to go ahead and jump right into getting this going if you're ready, because I know you got to get back to work or something. Right. That's what I remember someone saying. So want to be very, very cordial about your time. So here's what we're going to do today. First of all, I don't know if I showed you this. This is my license. Mm-hmm. Okay, and I am the one who's licensed by the state of Alabama to go over your qualifications for mortgage protection, okay? So just to let you know, by me being licensed by the state, I'm trained by about 20 or 30 different companies, okay? Because everybody has different situations. Everybody has different health. I mean, I can tell by your beautiful home, you're doing well. But some people have different health problems and some people have different financial problems. My job is to simply match you up with the company that's going to be best for you, okay? And what I'm going to do to find out what's going to be best for both of you is I'm going to ask you some questions about your finances. I'm going to ask you some questions about your health, okay? And be honest, because I'm not going to send a doctor out. If I can get you through, you're covered. I do the underwriting, the field underwriting as well. I'll submit that to whatever company we choose, and they will do the underwriting to make sure that you are a good candidate for their product, okay? What we'll do, once we get going here a little bit, once you make a decision on the companies, what I'm going to do is I'm going to go over these 20 or 30 companies, and with you, they have about 450 different products. And in about, so you're thinking this is going to take an hour. No, it's not. So in that time period, what I'm going to do is I'm going to narrow 450 products down to about 2 or 3 that are best for you. Okay. And then what I'm going to do is I'm going to show you maybe the full mortgage. I'm going to show you half the mortgage and a quarter of the mortgage. And when I do that, I'm just going to let you two determine what's going to be best for your budget. And then once you determine what's best for your budget, I will put an application in with that particular company to see if we can get you approved, okay? Does all that make sense? Okay, yes. Good. The other thing is, just before we get started, do you normally pay your bills with a debit card or a checking account? And the reason I'm asking is because what I found is if I know I can get you with a company that drafts a checking account, I can get you a better price. That's why I kind of want to think about that right now.
Sure.
Okay?
Yeah, checking account.
Checking
Yeah.
account?
Yeah.
Okay, good. Okay. So what I did right there, that was a soft closing. I wanted to make sure they didn't have an objection to making a payment or how they were going to pay. Okay. So is that good? Did y'all like that?
Yeah, I like that.
Okay.
Now,
Okay.
what if they say, well, we're just really looking to get the information?
Well, then you say, okay, so what happens, Neil, if you pass away tomorrow? How's the house going to get paid off? Do you have $250,000 in a bank account?
So you ask those questions.
Yeah.
Okay.
Yeah.
That's good.
And the other thing I'll say, so ask it again.
So, well, that's all great, Mike. We're just kind of looking, seeing what the pricing is.
Okay, great. What I'm going to do, Neil, Amber, I'm going to shop you to all the companies. I work for all the companies that could offer you the mortgage protection. So when I shop this out, even some of the ones that, you're watching TV and you see the ones come up on TV, I see them too. I know what I'm going to shop most of them because I can write with them. And when I get you your price, like a lot of these competitors, their rates go up every 3 to 5 years. When you deal with me, your rates will never go up. So Neil, you're 30 right now. How old are you, Neil?
50.
Okay, so you got a 30-year mortgage.
Right.
What's going to happen in 29 years? Your price is going to have jumped 5 times in some situations.
Yeah.
So, I mean, you worked for another agency, remember? That happened, right? Yeah, so every 5 years, those prices are going to go up. And Neil, what's going to happen? They're going to price you out where you can't protect your family when you need it the most.
Okay.
Okay, so at 80 years old, you're still paying a 50-year-old price.
That's good.
Okay, so that's why I shop them out. I do all the shopping for you. When we put the application in today, I promise you're going to be with the best company that you can qualify for.
That's good. I
Okay.
like that.
Okay. All right. So let's go ahead and get back into this. So I normally, like, this is a sharp couple, so I would start it very professional. Okay, I just need to verify that I'm with Neil and Amber Brown, and we are at 2412 7th Street, and we are in Enterprise, Alabama. Is that correct? Okay, and this is the form that you both had sent in. Do you remember doing that? I got it from Regions Bank.
Yeah, Amber, that looks like your handwriting.
Okay, Amber, you did it?
Yes.
Amber, when you filled that out, what was you thinking?
I was thinking that this mortgage was a lot to have to pay if something happened and we couldn't pay it. Or I
Right.
couldn't pay it if something happened to Neil.
So I'm guessing, like me and everybody else in the country, you don't have $250,000 stuck aside if Neil's in a car accident
Just a little
tomorrow.
short.
Yeah.
We're a little short.
Okay, okay. So yeah, that's why you do this. And I get a lot of people that say the same thing. And as I go through this, I'll determine, if we need to cover one of you, both of you. We'll have that discussion. Okay. So I just need to make sure I'll go over a few questions in a minute, but your mortgage balance is $250 through Regions. That's correct, right? Have you made your first payment yet?
I don't know, did we?
Yeah.
We did. We made the
Yes.
first one.
Okay, good.
It was actually a refinance.
Oh, okay.
Got a better
Okay,
rate.
good. How long have you lived here then?
6 years, maybe?
You've lived here 6 years?
yeah.
Okay. Now, the reason that's important that I ask that is because we know, like, if you're writing America, they may want another address. So we're going to go ahead. So, okay. So you've been here 6 years. Okay. Let's see here. Okay, so this is my cheat sheet, so I got to keep it, okay? And I'll look at it periodically. But now I want to go ahead and ask you some questions. So, Neil, is that your given name? Is that your real name?
It's my real name.
Okay, Neil. What's your middle initial, Neil?
M. Brown.
Okay, and how old are you right now as we sit here?
50.
You're 50. Do you use any tobacco products, vape, dip,
No, sir.
any left-handed cigarettes?
No.
No
Not
left-handed.
since college.
Yeah, okay, well, the reason we have to ask is because, some states are legalizing marijuana, some are not. And some of the companies that I'm going to try to put you through, they will ask me specifically if you smoke cigarettes. So
No.
I always ask if they smoke a left-handed cigarette. Yeah,
I like
yeah,
that. I
yeah,
have to remember
yeah, they like
I'm
that.
learning here, too.
Okay, Miss Amber, how old are you?
40.
40. All right, and is Amber your given name?
It is.
And what's your middle initial?
D.
D. Brown. Well, how long y'all been married?
Gosh, that's hard to remember.
That's how he gets in trouble. Huh?
Yeah, right.
Yeah, that's how he gets in
Let's
trouble.
see. We got to figure that one out.
Yeah.
20
Okay,
years?
well, let's move on before someone gets in trouble. Okay, you don't use any tobacco, Neil.
Right.
Amber, do you use tobacco of any kind? No tobacco. I have to ask you the same question. Any left-handed cigarettes? No. Okay. All right. I mean, I'm not the police, so if you do. Okay, so Neil, once again, beautiful home. I'm assuming you all probably have some pretty good jobs. So what do you do for a living, Neil?
I'm a construction engineer.
Okay.
New career.
Yeah. And let's say, can you tell me monthly what you make in case you passed away? The money Amber would be losing if you died.
Yeah, it's about $3,500 a month net.
Okay.
After all the stuff's taken out.
Okay, so that's what you have to work with.
Right.
Okay, Amber, are you working? Stay-at-home mom?
Working.
You're working. Okay. What do you do for a living?
Work in the medical field.
Okay. And same question: if you passed away, how much money would Neil be losing every month?
About the same. We make almost the
Okay,
same
so you bring home. So you're both together. It's safe to say, after taxes and insurance and investments and everything, it's safe to say you're bringing $7,000 a month, which
Right.
is about $84,000 a year into the home.
Right.
Okay, very good income. Congratulations. So let's go ahead and tackle the mortgage. Okay, so what is the balance on your mortgage as of right now? I know you said this was a refi, right?
Right.
Okay, so what is your mortgage balance?
$250,000,
Okay,
and it's 30-year.
30-year mortgage. So you're looking, Neil, at 50. So I was right in our conversation earlier. You're looking at being 80 when we pay this off, okay? Yeah, so,
Yikes.
yeah. So
I feel older than that.
that's okay. What is your monthly payment? Who's the bookkeeper in this family, by the way?
Well, I guess maybe me.
Okay.
Maybe you,
Okay.
yeah.
All right. How much is the house payment?
Right at 1,100.
1,100. Okay. Do you know how much equity you have in the home? What it's worth? Like, if you could stick a for sale sign out front of your home, how much do you think you could sell your house for right now?
Yeah, I think it was
answer that
like
question.
345.
Oh,
somewhere
very
in there.
good. 345. So the equity is 250. I'm from West Virginia, so once I run out of fingers and toes, I'm in trouble.
Let's say
340. It's about
Let's say
95.
350 and
Make it easier.
Yeah.
Thank you.
It's about
You figured that out quick, didn't you, Neil? Good. So 100,000 in equity, man, that's good. But how long you've lived here? 6 years,
Right.
And you still have 100,000 in equity. Very good. I'm just going to tell y'all very, very important. I think banks are evil and they're greedy, and I'm more worried about this 100,000. Do you all understand your equity?
What do you mean?
Your equity is what you would take if you sold this property right now. You would pay the debt off, but let's say, God forbid, he died. You may not be able to take care of this big house in the yard, and you need to sell the house, let's say tomorrow.
Okay.
$250,000 is what you owe the bank. So you sold the house. The $100,000 is what you would take. That's what your equity is. Okay? Does that make sense?
Yeah. Yeah,
Okay,
that
good.
does.
Are you both on the mortgage?
Yes.
Yes.
Okay. All right. If one of you two passed away, would there be a bigger struggle for one or the other?
I think it'd be hard for both of us.
It'd be difficult for
Yeah,
both. Okay,
no
good.
doubt.
Yeah, because you're exactly the same here in income.
Right.
So you're losing half your income if something happens,
Right.
which is why this is important. Okay. So are you doing anything right now to pay your mortgage off a little sooner, making principal payments? Have you started doing that yet?
Not really. We just paid the first.
Okay, great.
payment.
Well, I'll tell you, if you qualify, we actually have a plan where you don't have to take any principal money out of your own pocket. If you get one of our mortgage protection plans, which I'm going to be right up front with you, it is life insurance. So, but what this is what I call life insurance on steroids. Okay. So you don't, Neil, there's even a chance, I mean, you're 80. There's a chance you could have a heart issue or cancer or anything in the coming years. If you get sick, this could pay out 100% and you don't have to die. Okay. So it's really nice to know that you can, as you get older, that this would be there to protect your biggest investment that you're going to make. Okay, does that make sense?
Yeah.
Okay, I know I got on a rabbit trail there, but I like people to know this isn't just you got to die to get the money.
Okay.
And the reason I brought that up is if you go with this, you don't have to make principal payments, because principal payments take 3, 5, 7 years off of a home mortgage. With this, at the 25-year mark, I can set it up where you get all your money back, and you can pay your house off 5 years early, and it's given back to you tax free. Okay, so it's a really nice nest egg to have, knowing, hey, I've insured my family, I've protected my family. Basically, for that time period, you had free life insurance, which is really nice. Okay. So let's get into this now on the medical side. Neil, I'm just going to ask you both some questions at the same time, and just tell me, okay? Anybody, and this is what I do. I touch I just go straight down my body. This helps knock people out quickly if we need to knock them out, or it helps us to know we can keep going in the direction we want to go. Okay. So Neil, Amber, anybody had any strokes or anything like that? Anything wrong with your brain? Any depression? Any suicide attempts on your record? Any drug or alcohol addiction?
No.
Anything? Any mezzaloca, la cabeza, mucho loco, un poquito loco?
No.
Do you understand what I'm saying?
We're not crazy.
I think you're, yeah.
Okay, well, usually,
there are days.
usually the people that answer are the ones taking the meds.
Yeah.
So what meds are you taking?
Nothing.
Nothing? Okay, so no loco.
Just
No.
loco.
Okay, all right, good. With that said, does anybody have any heart problems? Ever had a heart attack, a stent, a valve replacement, anything like that?
No.
Any blood disorders, Hep A, B, C, all the way through Z? No Hep A
None.
through. What AIDS, HIV, anything wrong with your blood? Are you anybody diabetic?
No.
Nobody's diabetic.
no.
Any high blood
I
pressure?
have high blood pressure.
Okay, you have high blood pressure.
Yeah.
What meds do you take?
I'm not sure.
Is it lisinopril? Most people take lisinopril.
Yeah.
Okay, a small dose. Let me ask you this: is your blood pressure regulated? Taking the medicine?
Oh,
Is
yeah,
it good?
it's all
Okay.
under control.
Okay, you're not taking 3, 4, 5
No,
blood
just
pressure
one.
medicines.
Just one.
Okay. Okay, so just the one blood pressure pill. Okay, I mean you look fit.
And that's
so-
really it
okay
for me.
Good. Any blood pressure issues with you?
No.
Okay. Any diabetes with either of you? Okay. Let me kind of get back to what I was asking.
Sure.
So no heart problems at all. Okay.
No.
Any lung problems like COPD? Anyone got any cancers or anything at all anywhere in your body?
No.
Any sarcoidosis? Any lung issues at all? No.
No.
Chronic asthma, bronchitis?
No.
Okay. Emphysema, anything like that? Okay. Okay, very good. Any kidney, liver problems?
No.
Anyone on a dialysis? Is anybody like no one's waiting a transplant or anything like that?
No.
Okay. So with that said, have any of you been prescribed pain pills in the last 24 months? Okay. What about in the last What about in the last 10 years? Have you been on any pain pills for a long period of time over the last 10 years?
I had a surgery one time, and they gave me Norco.
Okay. How long ago was that surgery?
5 years, maybe.
Okay. I think we're good.
Yeah.
And you didn't refill it?
One time I did.
Okay.
Yeah.
Okay. And I have to ask you, what was that surgery?
It was to take off a pilonidal cyst on my tailbone.
Okay.
So it wasn't a big.
Okay. But that was 5 years ago. It was Norco. You refilled it once.
Right.
The reason we have to ask that, some of our carriers are very particular about the opioid epidemic right now. So what we have to do is make sure we don't have someone getting a lot of refills. Because I might say,
I see. Yeah.
on paper, you might look really good and not told me, hey, I've been taking oxys for 5 years straight. And then that's going to get you kicked out of that program when they do your medical background, okay? So that's why, and thank you for being honest, because it's important that you're honest with me, because when I run your medical background, they'll find
come
it.
out.
Yeah, they're going to see it. And then it becomes a bigger red flag that you don't disclose something. Does that make sense? Okay, very good. All right, so other than the Norco, have you needed any pain pills or anything?
Same thing for me. I had a surgery
Okay. And how long ago was that?
15 months ago.
15 months? Okay, we're outside of. Did you have to refill anything?
No.
Okay, what was it? In case they ask me about it.
I think it was the Norco.
Okay.
But just had it the one time.
Okay.
from the
Well,
surgery.
I'll be honest with you. There's times I can get Norco through with no problem, and sometimes it doesn't. So we'll run your MIB here in a little bit just to make sure. And it's no problem if the company I choose says, hey, no to Norco. I'll just jump you over to another plan, okay?
Okay.
All right. So that's what we're doing right there, ladies and gentlemen, is we're setting them up in case they would get declined with one company. We're letting them know we may have to jump you to another. Okay,
That's
fair
good.
enough?
I like that.
Okay, so we may jump you to another company. Okay, so no kidney, liver problems.
No, outside of that, there's nothing.
All right, is your legs hurt from running from the popo?
No.
Okay.
We haven't been arrested in many years.
Yeah, many years. Okay. Well, how
You're
many is
robbing
many?
banks.
I need. Okay. Bonnie and Clyde. I got you.
Yeah.
So,
we're
so
good.
how many years has it been? No felonies is what I'm asking. No,
nothing,
felonies.
Nothing. No,
No high-speed chases. I'm not going to see you on live PD getting chased down the road.
no
um,
OJs.
Okay.
No.
Any extreme speeding tickets, or do you have any speeding tickets at all? The reason I ask is we do have to check your DMV. We got to make sure you're not out drag racing
Right.
late at night and stuff like it. Amber, you look like a drag racer. So,
Yeah.
yeah.
I tried to give that up.
Okay. So anyway, does that all make sense? So,
Yeah,
so,
we're
so
good.
no one's
We're
been
good
out
on
running
that.
from the popo.
No.
Okay. All right. All right. Very good. So far, y'all are doing great. I'm not seeing really any major issues getting you with our number one company. Okay. But we're going to move forward and we'll run that MIB in just a few minutes. Okay. All right. So outside of work, because your work is kind of, it's wishy-washy insurance. Do you have any life insurance in place right now outside of work?
We have, I think we took those small, like, burial policies out. They're maybe
Okay, do you know what-
10,000.
Oh, okay, that's all.
Yeah.
And those are usually purchased for people to set that aside so when they die, their family don't have to put the
Right.
money out.
Right.
That's what we
So
did
let's
for
not really count that towards
Okay.
this, okay?
Okay.
Because do you know who that's with? What company?
I couldn't tell you.
Did you both go through the same company?
Yeah. We
Did,
didn't
like someone
really-
like me came to the house, went over it with you?
No, I think we did it online
Okay.
or through the bank or something.
Okay.
Like
Oh,
that.
the bank?
I don't remember.
You sure it's not accidental if you
No,
went
it's
through your
definitely
bank?
life insurance.
Okay.
Yeah.
You got that policy?
Um,
I'll tell you
Not
what,
sure
let's
where
set
it
up
is.
another time. I'll come by and
Yeah,
read those policies
that's fine.
for you,
I
okay?
appreciate that.
All right, and we'll
Like-
make sure that you don't have. I've had people think they're covered and they have accidental, and,
okay.
and you got to die 17 different ways with accidental to get paid out. Okay,
Yeah.
so
17
if it's on Sunday and you're wearing red, they don't pay. Okay, so just kidding, just kidding. So let's say $10,000. You did it online. I'm not sure what company that would have been. Let's set another day. But I'm here today to take care of your mortgage protection. We'll work on your final expense another day.
Perfect.
Okay. All right. So, do you have anything that acts? This is going to seem odd, but do you have anything that acts like life insurance? That acts like life insurance, not actually life insurance.
You mean like a, what, 401k or
Yeah.
something
Do you
like
have an
that?
old 401k
Yeah, we
maybe
got
from
s-
another
We
job?
got small 401ks at our companies, but
Okay, but
Yeah.
you're still building.
Yeah.
That's at the
Yes.
anything outside of that. The reason I'd love to be able to help you with those, but right now you're already investing into those.
okay.
Tax free. You know, there's a fee if you take it out before 59 and a half. You have a pretty good setup because I know the companies you work with and they take good care of y'all. I'm saying outside of maybe from another job, a 401k you never rolled over, a savings of more than $10,000. Got any money buried in mason jars out back? No, no mason jar money.
No Mason.
Okay, yeah, I don't either.
No, just-
Hey, Amber, if he croaks, call me. I'll help you dig. Okay? All right.
We did inherit 15,000.
Okay.
A couple of years ago. We just have it sitting in a bank account.
Oh, really?
So what
are you drawing on that? Maybe
we're
0.25%?
it's safety. Just
It's
leave
just
it there,
sitting
so
there?
it doesn't go anywhere.
What if we could get it where we keep it safe, no risk of loss,
Okay.
and get it on 6, 7, 8%? Heck, in 7 years, that 15,000 would double.
I wanted to
Okay.
hear that.
Yeah.
Okay, well, let's
Okay.
do this. I'm going to come back next week to review your.
All right.
Okay, so you have 15,000 in the
15,000,
savings.
yeah.
I'll get an illustration from our finance company.
Okay.
And I'll just bring you an illustration and go over it with you. It won't take me 2 minutes and see if you like it. Might be a good move for you, okay?
All right.
Okay.
All right, good. And we'll just schedule that. Let's. I'll take care of that before I go, okay?
Okay.
All right, so okay, Mike, time to get back to the mortgage protection.
No, that's good though, Mike. I appreciate it because we kept that in the bank just so we wouldn't lose it and
Yeah.
we wouldn't spend it.
Yeah.
But
Oh, I just did this for a guy, Neil, in Birmingham.
yeah,
And he had $15,000 they were just setting on in case they needed it. And they really didn't need it because financially they were doing okay. And I just took the $15,000, put it in an annuity, and you know, they showed him an illustration where he could gain 9%. And they give you a little bonus for moving it. So you'll make more in moving
just
it
moving it
than you would having it in an account
That's
for
good.
10 years, okay?
All right.
Yeah, and I'm sorry, I didn't want to get caught up in that. I'll bring that by. That's
Okay.
for another day, okay? All right, so let's get back to the mortgage protection. You all are doing really good health-wise. And our number one company is Americo, okay? Now, we have other good vendors too, but I write a lot for Americo. We have John Hancock, we have Mutual of Omaha, but right now, I'm looking at putting you with Americo. Okay, they are an American-owned company. They're actually a family-owned company. Been around for about 106 years. So what I'm going to do is I'm going to get those rates together for you. And what I want you to do, I've actually brought a sheet that you can read over while I get those rates together for you.
Okay.
Reading over this, did you understand everything?
Yeah, it's good.
Okay, let me go over it with you.
Okay.
So what I do is before I ever discuss price and product, I'm going to give them all the benefits first, okay? Okay, so Neil, Amber, this is really important that you understand this. This is what I was saying. This is not just you got to die to get the money. If you get sick, you can get your money back if nothing happens. It's a really great plan. So here's the thing. It used to be back in the day, Neil, probably when our parents were buying homes, only the bank got paid off. Now, Neil, you can pick your beneficiary. This check, if let's say you go with a $250,000 policy, this check will go to Amber if you die. If you get sick, this check's coming to you. It's not going to the bank. Okay? So here's the way I look at it. You can do the full amount to pay off the full lump sum, okay, which is $250,000 on the plan I'm going to show you. Or you can do half of it. And that's good when husband and wife make the same amount of money. They can both take $125,000 and it would still cover the full $250,000, okay? So you're protecting each other truly in that arena. Or if budget's tight and you need to start off a little lower, we'll show you what a quarter of the mortgage, getting to that point of you being 80, Neil, when you pay this off, you might need that money towards the end of your life or to help her pay it off. But number one, it's got to fit your health, and I still got to get you approved. Number two, it has to fit your budget, okay? So that's why I show this. This is going to pay the full amount off, and I'm going to do a policy for each one of you. So you can get $250 and you can get $250, and you know the house is covered no matter what, okay? Now, this is a rabbit hole, I know, but I want to share this with you. Let's say, Amber, you die in a car wreck in 25 years, okay? And there's only $20,000 even left on paying the house off. Here's the great thing. Neil's still going to get a check for $250,000. Isn't that nice?
That's awesome.
So Neil can take that 20, pay the house off, and the kids and you and the grandkids, whatever, are still going to be able to put $230,000 in your bank, and that's all tax-free.
Nice.
Does that make sense?
Yeah.
Yes.
So that's where it is like traditional life insurance. You still get the full amount, okay? So this is portable. Is this first home y'all bought together?
Yes.
Yeah.
It is? Okay, so this isn't on the address. This is on you. So Neil, Amber, you guys decide to pick up and you move to southern Florida or down the Keys. This goes with you. So you still have this same coverage because this is a portable policy, okay? It doesn't matter what state you move to. The death benefit remains level. There are some plans where it pays the balance off. As the mortgage balance goes down and you die, it pays it off. That's it, okay? It's called a decreasing term. You've probably heard of that.
Right.
Neil, you and I are close to the same age, so I remember my parents.
Yeah, it was a
It
big
had paid the house off, but there would be nothing left over, okay?
Right.
So what we find in that is families are still getting kind of stuck, not having any money. So this is going to be, this death benefit remains level. In other words, it's what I was explaining up here. If you owe $50,000 on the house, it pays off $250,000. When you get the check, you can pay the $50,000 off and you get to keep $200,000, okay? Does that make sense?
Mhm.
Okay, good.
good.
So the death benefit remains level. It never goes down. Guaranteed rates. These rates is what I was sharing with you earlier. These are never going to go up on you. And that, to me, is a big deal because, Neil, when you hit 75, 75% of all men have a heart issue by the age of 75. So this is really a big deal because you can still be able to afford it, okay? This is 24-hour coverage, accident or sickness. Remember I was kind of talking bad about your work policies?
Right.
If you're not at work, some of those don't pay off. Remember that accident I was telling you about?
Right.
If it's your fault through your bank, it doesn't pay off.
Okay.
These pay 24-hour coverage. Okay. Now you can't be committing suicide. If you ever
Right.
get to that point, you call me. I don't care if it's 3 o'clock in the morning. Okay. And we'll talk. And then also what you need to understand, even if the accident would happen to be your fault, 4 or 5 years into it, these still pay out. Okay. Now it can't be not felonies, DUIs, stuff
Right,
like that,
right.
but legitimate accidents. Okay. The other great thing that I love about this is if you do die in a car accident, Amber, one day, this is going to pay Neil 50% more.
Okay.
Okay, so it's not just like the $250; it'd be $375,000 he would receive. Okay, so then, do y'all travel for your work at all?
A little bit.
Okay, so let's read here. An additional 100% of your base, which would be the $250,000, would be paid to the beneficiaries if you are on a fair paying carrier. So if you're on a plane and you paid to be on it, or an Uber car, and you die that way, this is going to pay 100% of the base, which is another $250,000. Okay? So, yeah, really good stuff. The reason we do that is because this is true mortgage protection. The reason these companies have added these in is because, if someone gets cancer, you can kind of prepare for that death. But someone's running to get milk at the store and they're killed in a car wreck, that's tragic. And it just shakes your world up. Honestly, I'm not trying to be dramatic. I'm just saying if she would come down with cancer and you got a year to think about it and begin to process it, but if he is driving down to pick up milk that he forgot and he doesn't come home, that's a whole nother, that's like in 60 seconds you have to process it. You don't have a year, okay?
So you're saying if I have a $250,000 policy and I'm on a plane and it crashes and I get killed, it pays $500,000?
Yes.
Wow.
Yeah.
I didn't know that.
Okay. All right. Now here's the thing I love, Neil, especially at our age, brother. Okay. Living benefits. I noticed you got a younger woman, man. Give me some of that.
Yeah,
bro. That's what I'm talking about. Sorry, Amber. These living benefits are very important. So Neil or Amber, if you ever become chronic, critical, or terminal, this is the only company I have that does this. They'll pay up to 100% of your policy, $250,000. So you don't have to. And a lot of people are like, "Well, Mike, what if I recover?" Okay, keep the money.
Right.
You was chronic, critical, or terminal. Because what we don't want is for you to get extremely sick and lose the home. Does that make sense?
Yeah.
We don't want you to get cancer and lose your home because you're sick.
Yeah.
It's true mortgage protection, so you don't have to die to get the money.
Okay.
Can I ask you something? Have you all heard me say that a lot throughout this presentation?
Yeah.
You don't have to die to get your
Right.
money. That's how I sell a ton of America. Okay, so y'all understand this, right? Okay, and here's the guidelines. And once again, read it in your policy. Make sure it's exactly as I said.
Okay.
And the final thing, and honestly, this is what we pray for. We just pray no one dies.
Right.
Okay? It's great. It's great to have this protection if you do. But, Amber, if you don't, at the 25-year mark, because you own a 30-year mortgage, so instead of waiting to pay this off at 80, Neil, you can pay this off at age 75. Okay? And then you can go into retirement debt-free. And that would be nice.
Yeah.
So you get all your money back, and at the rates on this, it's going to be multiple thousands of dollars. So you can get all your money back, pay your house off, and take a very nice vacation. Or buy a nice car or whatever.
And this is awesome. So the question is, can we afford it?
Okay, yeah, I think you can. Looking at your
But
budget.
I like this. This is really good.
I figured you would.
Yeah,
that's good
excellent.
stuff. It's great for a guy, you're midlife now.
Right.
And you need to, You need to think you're on the
It's
downhill
later
side,
in
brother.
life than
That's
you
right.
think.
That's right. Okay, so I just want to show you what this came up with. And these here cover everything here,
Okay.
just so you know. So the full $250,000 for Neil would be $359 a month. Okay? That covers all this. And it goes into effect day one once you're approved. Okay? So, Amber, this is going to cost you, because, and don't get mad, she's younger and women always pay less. Amber, this is only going to cost you $199 a month, okay, for all that. So you can see age, you know.
Factors into
Yeah.
it. Yeah.
He's uglier than you are. You know,
He's brutal. Good thing we know him.
yeah.
Good thing we go to church together.
So here's the other thing. Let's look at half of it as well. So you can see here, half of your mortgage, Neil, is going to be $180, okay? And yours is only $101, Amber, okay? And then this here is just if the budget's tight, and I totally respect that, because I get a lot of clients that their budget is just too tight, but they need something and they realize how important that is. Neil, yours will be 101 for the 62.5, and Amber, yours is going to be 57 for the 62.5. Okay? So this is the full mortgage for each of you: 250 and 250, 359, 199 a month. Okay? Half the mortgage is 125, 180, 125 is 101. A quarter of the mortgage is 62.50 or 62.5. So 62.5 for you is 101. For her, it's $57. Okay. So here's what I want to do. I want to put this over to you. You two talk that over and tell me which one best fits your budget. Now, if you have any questions, ask me, but I'm going to remain silent at this time.
Okay.
That's a lot. I mean, because when you add it together, it's half our mortgage. Now I'm doing a lot of traveling, right? I'm driving a lot of miles, so you know this I can see. All right, so this is almost, let's see, 180, 280 a month. That's a little more reasonable, right?
I think so.
So I would tend to be more. Mike, can we think about this for a while? Because see if we can. Because we've only made one mortgage payment, and
Yeah, I understand.
you know.
I understand.
Okay.
So let's do this. I do this with people all the time. You can think about it, and when the policy comes, you can actually read over it and
Okay.
and make sure it's exactly as I said. If you're happy with it, great. If not, then you call the carrier and just tell them, you know, hey, I want to get rid of it. I don't encourage it. You're both at an age that you need this in place. Okay. Here's the other thing. Let's see if I can get you approved first. And okay, because they're raising an objection and the price was the first thing they brought up. This is how I do this
That's why I'm asking. 'cause
every
I wanna,
time.
I wanna
Okay.
hear it.
All right, Neil, Amber, can I just be honest?
Sure.
Okay. You all don't need a $250,000 a month policy, and that is every time when the people go,
Yeah. Right.
okay, you don't need it. And so they'll often say, well, why not? Okay, so here's what I do. I physically cross the top one out, and I'll say, Amber, do you mind if I tell you what you actually need? I'm going to tell you what I would like to see you do. I mean, if your budget only allows this, do that.
Okay.
Okay, but here's what I think you need to do. Your full mortgage is $250,000, right? Amber, I have you, or Neil, I have you here at 125. Amber, I have you at 125, right? And it's half of what you'd be paying up here for both of you to have full amount. But you'd still be able to cover the full $250,000 mortgage because 125, 125. God forbid you're both killed in a car wreck, pays the house off for the kids, right? Because it's
Yes.
$250,000. The other thing is, number one, it's going to lower that concern about the payment.
Right.
Okay. The other thing is, I can still set this up at the 25-year mark, and it'll still pay your house off in full.
So is this that cash back thing?
Yeah.
Okay.
I'll still set it up at the cashback option. So here's what I'd like to do. We need to go ahead and get you approved today, and then that'll give you time. Excuse me. It'll give you time to look over the policy, read it, and make sure it's exactly like I said. If it's not, call me and we'll cancel it. But you two could really use this because you have no life insurance
Right.
and you have no real savings.
Right. Yeah.
So basically, you're going to be homeless if you don't do it. I can see that.
Yeah. And
That
with the
would be good.
kids, we should probably
Do something.
do
Right?
something. Yeah.
Are y'all comfortable with this 125 and 125 price?
It's a lot, but you know, we've waited a long time to get insurance.
Yeah, most
right?
people have their life insurance by age 50, Neil.
Right. Right.
And you're still healthy enough, I can get you covered. All it's going to take is a stent, little heart attack,
Right.
little
You can get
TIA,
it.
and all this. And I will be very honest, I'm not trying to scare you. You ever have a bout with female cancer or anything? All this is off the table. It's all off the table. Okay?
Okay. Well, let's see if we can qualify.
Okay, great. At this point, I have to identify you with a government-issued ID according to the state law.
Okay.
And then I'm also going to need your, you said you use checking
Yeah,
account?
we gotta check
I'm going to
it out.
need the bottom of a check so I can get those numbers, okay?
Perfect.
All right, so
All right.
we're going to put it through and get
That's
it approved.
good. Excellent.
Okay, good stuff.
That's good stuff.
Thank you, Neil and Amber.
Thanks.